it comes to securing our future, financial protection is often overlooked. Because of this, I'm joined with Laurence Hoffman, a financial advisor and protection expert from Advantage Protection, to discuss everything you need to know about financial protection. Hello, Laurence, how are you?
I'm good, thanks. Hi, Ella. This is all quite new to me.
Yeah,
but,
I could tell.
Pleasure to be here.
Looking forward to our conversation about protection today?
Yeah, absolutely. Yeah.
Amazing. So for those listening, please introduce yourself.
Yes, I'm Laurence. I'm the protection manager at Advantage Protect. We're based in Bristol. I've travelled down from Cardiff.
Yes.
So, yeah, it's a bit of a homecoming for me. I grew up in London originally. It's basically all my family are from London.
Yeah.
And I moved to Wales at 13.
Wow.
So, yeah, it's a bit of a shock coming home one day and my dad says, Laurence, we're moving to Wales. And
oh, gosh.
No, we're not. Absolutely not. But no, I've loved it. And yeah, it's been like 25 years now.
And you're back in London for the podcast, which is so fun. And I guess, for everyone listening, how did you get to where you're at now?
I just kind of fell into financial advice, really. I worked for a broker based in Cardiff. I quite quickly saw the potential career progression. I studied the industry qualifications.
Okay.
So yeah, quite challenging. And I just got the right temperament for advice, I guess. Yeah, speaking to clients, it's their first introduction to protection. And, financial services can be quite daunting and intimidating.
Definitely.
And you're just condensing that, 10 years experience and knowledge into, say, a 30-minute or an hour phone call.
Yeah.
And yeah, I enjoy it. It's interesting.
I love that. And I guess we've obviously had a couple of Zoom calls before we obviously got you into the studio today. But I guess for my audience, I want them to know a little bit more about you, Laurence. So what's the most unexpected thing you've ever splurged on?
Unexpected thing?
Yeah.
I wouldn't say I'm much of a splurger in general.
That's what I like to hear.
I don't like, expensive watches or fast cars or anything. Now, well, I've got about 200 vintage football shirts.
Wow.
And they amassed in quite a quick duration. Most of them are probably 20, 30 years old. And it's a very interesting hobby. I was very much into football growing up.
Yeah.
I'm a bit more of a armchair fan now.
Yeah.
But, it's just collecting. It just takes me back to my youth, really.
Really?
It probably started about 5 years ago. There's quite a big collecting community on sort of Instagram and online and things. And it's just like, just all these different shirts and collections. And
are they expensive?
Yeah, they can be.
It's given the vibe that it can be quite an expensive collection.
You'll always hear the term match worn shirt.
Okay.
So that means an actual player's worn it.
Oh, wow.
And was it Maradona? His shirt sold at auction, I think it's 2022. I think the auction estimate would have been about £500,000.
£500,000.
It sold for £7 million. Just to make it clear, football shirts are not a wise investment.
£7 million.
Yeah. So I'm not quite.
You haven't splurged £7 million yourself, have you?
I haven't got quite that.
Okay, good.
Clout yeah.
I'm glad. What's one piece of financial advice you would tell your younger self?
I think you'll hear it from a lot of people in financial services, but I wish I bought my first house when I was a bit younger.
Okay, that's not something some people have actually spoken about on the podcast.
No, it's house prices are always going up, and renting is money down the drain. You hear all of this, but the thought just never occurred to me. I just didn't have that guidance, I guess. And protection's always discussed alongside mortgages.
Yes.
I'd say probably 80% of the people I speak to are, buying their first home or moving house, and there's no financial protection in a mortgage. So it's, it's a very big responsibility. Yeah. So it's often something that people look at. And I started work at a mortgage broker, and they just said, where do you live? I said, oh yeah, I've been renting, the last 10 years. And they're like, do you have any money saved up? And I was like, yeah, a little bit.
Yeah.
And they were like, oh my God, buy a house. And I was like, okay. So it just,
why not?
it just catapulted me into buying a house.
Wow.
Yeah.
And how old were you when you decided to make the purchase?
So I would have been 32 at the time.
I mean, that's like UK average for home ownership now, to be fair. So
Yeah,
not
yeah.
too far off. How old would you have ideally wanted to have been if you could choose?
I don't know. So I've just always been in Cardiff, you know, and renting and moving house, and renting's quite expensive, but I'd probably say 5 years earlier, perhaps.
Okay, interesting.
Yeah,
That's
yeah.
such an interesting one that you would have told your younger self, because property I think is such a hard one that I guess everyone has the goal of achieving, but find it really hard to, I guess, place an age on it, because I guess it's everyone's financial circumstances are so different. So thank you very much for sharing that.
Yeah, and I was just saving. Well, I wish I didn't have the football shirt habit at that time, because it would have delayed things by quite a lot, put it that way.
No, that's so interesting. And obviously today we're chatting about financial protection. So we have spoken about financial protection a couple of times on the podcast, but I guess for anyone that has never heard of the term before, what actually is it?
So financial protection, they're quite unique in the wider insurance industry. Everyone's had exposure to some kind of insurance, car insurance, home insurance. They tend to fall in the general insurance category. So you take out a policy, lots of very detailed terms and conditions, exclusions. It's annually reviewable, and you're always shopping around for a better deal year on year. Now, protection policies, it's a contract that you're taking out effectively with a provider, and they're very long term. They're setting you a price which remains fixed for the entire duration.
Yeah.
And and it's basically catering for the financial impact of different events occurring. The big three: passing away, having a serious illness, or being unable to work due to ill health.
Amazing. And I guess I am in a privileged position where I actually do own life insurance and income protection policy. But why do you think people should consider taking out financial protection?
I don't think they're for everyone. I think it's understanding the options available and just weighing up the cost against the potential benefit, really. We're very lucky in this country that we've got a very robust and competitive protection industry.
Yes.
I've spoken to mortgage clients in like Germany and Spain, and if a £10 life insurance policy here would be maybe £40 over there.
Wow, that's a big difference,
it's
isn't
crazy,
it?
yeah.
Oh gosh, and obviously, you mentioned cost there, and I would say like my policies are quite reasonable. I think for both of them I'm paying maybe £50 a month, and I have income protection because I'm self-employed. But why do you think young people often overlook getting some sort of protection in place?
Everyone goes on, their journey through life, and they'll it just happen. It's just when you come across it, really. When I first started in protection, I didn't know anything about it effectively. I'd had a couple of insurance jobs before, but income protection, this is what it is. This is how it works. And I was just like, oh my God, give me some of that immediately. It was just, it's the one policy everyone should have, really. And I think maybe with young people, there's the attitude of, you feel indestructible in your 20s. Illnesses only happen to older people, things like that. Similar to pensions and investments, it's actually so useful to do things when you're relatively younger.
Definitely.
So when you arrange a protection policy, it's really straightforward. They're setting you a premium based on your age and smoker status.
Okay.
Once you set that premium, it doesn't change for the whole duration. So the older you are at the time you apply, the more expensive policies become. Now, the most valuable thing with any protection policy, after that policy started, any changes in your health, your circumstances, nothing new affects the policy that you already have.
Okay, I didn't know that.
Yeah, so if a client's got severe asthma, you might go to a provider and they'll say, great, when was it diagnosed? Have you been admitted to hospital? Lots of detailed follow-up questions. We're happy to offer you a policy. We're going to increase the cost 100%. And so many people would just be like, oh, okay, thank God I've been offered a policy. It's a bit more expensive, but I'll take it.
Yeah.
Now, if you'd already had that protection policy and you develop severe asthma, you don't have to inform the insurer and it won't affect the policy that you already have. So it's not just taking it out when you're younger in terms of affordability, it's the comprehensiveness and accessibility. And, it's unfortunate, but people who have had relatively serious illnesses or a horrible accident, they can just become completely unavailable, unfortunately.
Yeah. It's so interesting because I do think, especially in this cost of living crisis, cost is a big thing, right? We're told to save, we're told to invest, and I guess taking out some sort of financial protection can be seen as just an extra burden of a cost that we don't maybe want to take on. But financial protection has so many useful benefits. So I guess, what are the different types of financial protection policies out there that people can take advantage of?
Everyone has the same need with financial protection. It's the financial impact of, like I said earlier, passing away, and then there's serious illnesses and being unable to work.
Yeah.
And I'd say they've two categories. Life insurance stands alone.
Yes.
It's probably the policy people are most familiar with, and it's just really simple. Every provider does exactly the same thing. If you were to pass away for any reason, it's designed to take financial pressure off somebody else.
Yes.
So if you were single and you lived alone and you had a mortgage, it wouldn't be a very high priority. It's not something that you can benefit from directly, but if you're buying a house with someone, particularly when children hit the scene, that's when life insurance is particularly valuable.
Yeah.
And it's losing a partner's income into the household's one thing, but then there's very obvious financial pressures being a single parent.
Definitely.
And raising a child.
Yeah. And so obviously that's life insurance. Would you mind breaking down that income protection and critical illness cover?
Yes. So I'd say they're a bit more interesting than life insurance. And, everyone has the same dilemma, and it's how you structure those two policies. Yeah. Critical illness cover, basically, if you have a confirmed diagnosis of what are considered to be very life-threatening or serious illnesses, you receive a tax-free lump sum immediately upon diagnosis.
Tax-free, capital, guys, in capital letters. That's tax-free.
And they're basically the illnesses that you want to try to avoid as long as possible during your lifetime.
Yeah.
And they'll catch up with all of us eventually. But very morbid. But it's very common that people tailor it around mortgages.
Okay.
And like I said, I've worked with mortgage advisors that do their own protection, and they can be very lazy with it.
Interesting.
Do you want life insurance for £10 a month, or do you want life and critical illness cover for £100 a month?
Oh, wow. Okay.
Half of them will say, that's far too expensive, we'll just
yeah.
take the life insurance. Others will say, no, this is a genuine concern for me. I want to protect my family, my household, and they'll end up paying quite a lot of money.
Yeah.
And I think in that situation, I see it so regularly. People have these huge critical illness policies, and basically, if you put all of your eggs in the critical illness basket, say you had a car accident, a serious head injury, chronic back pain, broken leg, stress, depression, these aren't critical illnesses by definition.
Of course.
It's not cancer, stroke, heart attack, brain tumour. And I'd probably say that's where income protection comes into play.
Yeah.
So income protection, if there's any medical reason that could stop you from doing your own occupation, you receive a long-term tax-free income until you recover.
Wow.
And it's, critical illness cover is the most desirable policy, I'd say. If you ever need to claim on that policy, it's going to be a very serious life-changing event. Income protection is a lot more practical. But that example with the huge critical illness policy that I mentioned, income protection can be tailored to be a lot more affordable than a substantial amount of critical illness cover.
Yeah.
Once you have that long-term financial safety net, you don't have to worry about the long-term financial implications of a serious illness. I've got cancer, I can't work for 3 years. Your income protection is going to kick in.
Yeah.
Therefore, you can just break free from the mortgage and tailor critical illness to have as much or as little cover as you like, really.
Yeah.
I've got 3 policies that probably add up to about 60,000. I wouldn't be able to retire early or clear my mortgage, but I could take, my partner could take 6 months off work to look after me.
Yes.
I could pay for private treatment, therapy. And, income protection is only useful as long as you're alive. And critical illness cover, it just gives you that breathing space and chance to, recover, I guess.
Yeah, and I think it's really important that we're having this conversation today, because without trying to sound really morbid and depressing, but the inevitable is that we're all going to die one day, whether that is through a critical illness, whether that's from taking time off work. We are all going to sadly pass away at some point. So I think having that protection in place is so important, especially if you spent so much of your time building wealth, accumulating assets. You want to make sure that, one, the people that are left behind are protected if, God forbid, you do die unexpectedly, or
Agreed.
when you are alive, you are protected, especially like for someone like me. If I wasn't able to work for 6 months, where's my money going to come from being self-employed, right?
Yeah,
and
absolutely.
I don't get statutory sick pay because I don't have an employer. So things like that, you do really need to be careful and just plan for things that will sometimes happen, will most likely happen in the future, because there's nothing worse than looking back and being like, if only I had this policy, or if only I just paid £20 a month for this policy, right?
Absolutely. And, I think, I speak to clients who say, I've got 6 months of sick pay. I don't need income protection. It's like, people just don't realise that, you tailor it around your sick pay.
Yeah.
It's tied into the waiting period. So if you've got no sick pay whatsoever and it kicked in after 1 month, it'd be relatively a lot more expensive than if it was 2 months, 3 months, or 6 months. So the average length of claim for income protection's 7 years.
Wow.
It's crazy. And obviously a lot of people are off work for 3 months or 6 months. There's a large portion that just bump that average up massively because they can never return to work.
Gosh.
And, it's not, paralysis or multiple sclerosis. If you're a carpenter and you lose your thumb, you can't do your job, you can't function, that's an early retirement. If I lost my voice,
So
my girlfriend wouldn't, would be a bad thing to for the singing in the shower and things. But, if I lost my voice, I can't do my job. It's not your ability to work, it's your ability to do your own occupation.
Wow.
What you do day in, day out. And you can protect 60% of your gross income.
Yes.
Doesn't sound like much, but your salary's taxed. Income protection is tax-free, and you can claim multiple times, as many times as you need to. The cost never changes. And yes, if you could never return to work, it's hundreds of thousands of pounds you'll potentially receive.
And this is it. And because after the summer I was looking at my finances. I was like, okay, what can I cut out for my budget? And I won't lie, I was very tempted to just cut out the income protection or the life insurance policy, because again, I was thinking, oh, I'm only 28. Like, what are the risks of me dying right now? But then, like you said, you do lock in that price that you're at right now. So I wouldn't want to, I guess, get rid of it and then maybe 5 years down the line it's gone up, or something happens in that 5 years and they have nothing, or it's a case of you cancel it and you forget to get it again.
Yep.
And I just didn't want to fall into that trap. So I was like, you know what, Ola, you can sacrifice maybe 1 or 2 bottles of wine for your policies instead.
Well, if I don't know, my football shirt collection, my wardrobe's not quite filled with them yet, but I did see on Zoom you did have quite a few. You had quite a few, Laurence. I need to buy lots of coat hangers. I need wardrobe space. The important stuff.
So I guess one question I actually got asked from one of my followers the other day actually was, if I have a similar policy that we're discussing through my workplace, should I take out an additional policy alongside that? What are your thoughts on that?
Again, it's just them having protection advice. It's just putting everything at the forefront, and work benefits form a very large part of the overall protection picture. Now, I wouldn't say it's very common, but a lot of people have workplace income protection.
Yes.
So you can't have a private and a personal policy at the same time.
Okay.
Or you can, but only one or the other would pay out.
Yes, okay, that makes sense.
Critical illness cover, I don't think it's that common for workplace. I do come across it occasionally. I'd say the other big one's death in service benefit.
Yes, that's
true. So it's not, I wouldn't say it's the most reliable thing to plan your whole financial future around. Basically, it's only useful as long as you're employed there.
Yeah.
If you were to change jobs or become self-employed, you can't take that benefit with you. If I then spoke to the same client in 10 years and said, I need that life insurance policy, and they said, I've had this illness, I've had this diagnosis, it just might become very expensive or unavailable. Yeah. So, tailoring a policy around a mortgage, or even very short-term policies, child dependency age, those years when you have a young child and they're dependent on you, you can just tailor things to make it a bit more affordable. Yeah. And even if you had a very long-term debilitating illness, by the time you pass away, you might not be even employed for the same job.
And that's why I think when it comes to financial protection, it's important to seek advice, because yes, you could probably go on like Aviva and type in life insurance and find a policy, but I think advisors are great like yourself, because you can kind of look at across the whole market and be like, this is what you need based on your circumstances. But with that being said, what are some common myths surrounding financial protection?
I think people's attitude to insurance in general, people might see it as very complicated, or there's lots of terms and conditions and exclusions. I think travel insurance has got quite a bad reputation. If you had 1 pint of beer and there's alcohol in your system, claim rejected or whatever. But protection policies, what do you think is the average payout for life insurance policies in the UK as a percentage? Do you have a rough idea?
Like 80%, 70%, 90%, 100%?
Steady on. Almost 97%.
Wow.
And these life insurance payouts, they total hundreds and hundreds of millions of pounds, and even that 3% is a huge amount of money. Now, the most important step with any protection arrangement is the initial application. So you probably might remember they ask a lot of questions about your recent health, your occupation, if you go skydiving, rock climbing, if you ride a motorbike, family history, that's an important one. But they only ask you these questions at the time you apply. So the only times where you wouldn't have a claim paid out, or the most common reasons, is just misrepresentation.
Okay.
So if I said I was a non-smoker, but I smoked 20 cigarettes a day, if I said I was 15 stone when I'm really 25 stone, it's just literally situations where insurers can't pay out these policies. There's very clear line and information which has to be accurate. So when they assess a claim, they write to your GP, they get your full medical history, and they just make sure that everything matches up. Now, the applications themselves, they're so straightforward. They're not designed to trip you up in any way. 90% of the questions are either yes or no. If you answer yes to something, I had that asthma example earlier. When was it diagnosed? Severity, symptoms, and very straightforward.
And I'm sure there'll be people listening today, and I'm thinking this right now, what's in it for insurance companies to do this? Because surely they'll be paying 90%, 97% of claims. So how are they actually making money? Are they just banking on some people will never make a claim?
Most protection policies, they're term policies.
Okay.
So they're giving you a certain amount of cover over a certain number of years. And, life insurance, it's so accessible cost-wise. The chances of passing away before retirement age are very low. So most people will outlive their policies, basically. And, insurance companies, they've basically got the underwriting down to a very, I wouldn't say an exact science, but, they look at mortality rates, morbidity rates, assessing your general health and how that might impact on you passing away. So, 20 cigarettes a day, being overweight. I'm one of those two things. But
You're tall. You're tall.
And the insurance, like the competitiveness of the industry, that definitely helps in terms of pricing. Providers, if there was only 1 or 2 providers and they just had this monopoly on everything, things might be quite expensive. But they're all competing. The underwriting differences between providers are very interesting. So I know 1 or 2 providers, they're great. They've got lots of features. They can be quite competitive on price. They can be quite strict with their underwriting. If you had an ingrowing toenail 5 years ago, policy declined.
Wow.
Not quite that bad. But the other providers, they're just a lot more relaxed with their underwriting. If you had a certain illness, they might be completely fine with it. As where others might not have been.
So interesting. The insurance industry really, really intrigues me. And I guess, if someone's listening to the podcast today and wants to take out a protection policy, what do they need to be aware of when seeking advice or choosing a provider?
There's 2 different things there, the advice and the provider. Now, protection policies, it can be just a bit of a minefield in terms of getting fair advice. Now, I think it's one of the worst things in all of financial services. there's something called loaded premiums.
Yes.
So if you used an advice service like Advantage, or if you went directly to an insurance provider, they might give you a policy of £20.
Yeah.
It would be exactly the same.
Mm-hmm.
Now, I think banks and mortgage lenders, they're one of the worst for it. They'll have an exclusive relationship with just one provider. They'll inflate the premium and then just give this service provider a kickback. So that the £10 policy going direct would be £18 or £20 even.
Wow.
And then it, if you're looking at a £50 policy direct, it might be £80 or £90. It's crazy.
It's a big difference, isn't it?
And it's exactly the same policy. I'll speak to clients occasionally, and it's just like, you took this policy out 5 years ago, and I can still beat the price by sort of 10, 15, 20%. And it's just, these people are fortunate that it's spotted,
Yeah.
They just don't know any different.
But how do you know, as, I guess, a customer, whether or not it's a loaded premium? Is it best seeking advice from an advisor like you?
So, with any advice service, there's the regulation. There's, you're monitored by the FCA, and one thing that you have when you take out, whenever you get advice, someone will give you their terms of business document. So it'll cover off the regulation the company receives, if there's any fees involved with the advice, and then importantly, the provider accessibility. So it might say, we have a relationship with Legal & General. Mm-hmm. It's like, well, that's just one provider. Others might say we have a panel of providers.
Okay.
You want to look out for terms like we have access to the whole of market, or, every mainstream provider, things like that. So, these terms and conditions can often be skimmed over, but, it's just being aware of that situation. But there are plenty of advice services that just have the exact same cost as going directly.
Amazing. I think that's really important to know, because I didn't know that was a thing until we actually had our initial call before the podcast. But I guess, if anyone, again, is looking to take out financial protection, hopefully before the end of the new year, guys, is there anything else you think people should be aware of before they take out a policy?
Well, yeah, it's just understanding the ins and outs of everything. So if you go directly to an insurance provider, you'll go, I'll have £500,000 life insurance. You'll just play around with the numbers over 20 years, 30 years. Yeah. You'll see the cheapest provider and you'll apply. Mm-hmm. So, based on all the health and lifestyle things that we discussed, like I said, they might bump the cost up 100% and people don't know any differently.
Yeah, yeah.
And, with an advice service, it's, there's two stages, I'd say. Firstly, there's identifying what provider's most suitable. So Ola, if you go scuba diving, I'd go, how often do you go? What's the maximum depth you go to? Are you qualified? Do you ever dive alone? These are the exact same questions that a provider will ask.
Okay.
They then have something called a pre-application service. So I'll phone the insurer. I'll say I have a female client, she's a scuba diver. They'll rattle off their questions and they'll give me a very accurate indication as to who's most affordable. Okay. So you start at the top. Yeah. If they increase the cost, I'll go to the next provider, and just understand exactly who's most cost effective and comprehensive. Yeah. And outside of that, stage 2, is the policies themselves and how they're structured. So again, mortgage advisors, they're solely focused on the mortgage. They tend to just have these very expensive, clunky arrangements that might cost an arm and a leg, and income protection isn't really discussed that often. But I don't like leading clients down a path as to what they should do. It's just presenting lots of different options and giving people an idea of the different variables that affect price, and it's giving people the power to make their own decision, really. So in the next appointment, I want to decrease this slightly, change the term. Or you can even work backwards. I've got a budget of £50. What you've recommended is £70. Yeah. What would you suggest to bring the cost down? And then again, I can just present lots of different options, really.
Okay, that is all making sense. And this is why, for the most part, it's just easier to go straight to an advisor, isn't it? I'm not even going to lie. Because sometimes it's just a minefield. Sometimes it can be really overwhelming. And you want to make sure you're getting the best deal across the whole market. And so I'm so glad I had the honour and privilege to chat with you today on the podcast about it all, Laurence.
Thank you.
And I guess, like I mentioned, obviously, for me, my personal preference would be to seek an advisor. And that's exactly what I did. So if there's anyone listening to the podcast today that wants to take advantage of your services, how can they go about checking out Advantage Protection?
We've got our website. I think there's a landing page that we can provide to you. You can just put some of your basic details in there and arrange a time to call. I think in terms of the people who it's applicable to, you know, if you don't have protection policies and it's the first time you want to look at them and just understand how it all works and what's available, our service would be great. But I think most importantly, if you're paying £200 a month for a policy and you don't know exactly what you're covered for, then that person who's given you that policy has let you down. And there'll be, trust me, there'll be far more cost effective and even sometimes more comprehensive ways of doing things. And, you know, some of the biggest things with advice is a lot of providers, they have like great member benefits. It's a little bit sneaky by me, but there's one provider in particular. I get a free annual health check. I get 6 physiotherapy appointments a year for free. I speak to, I think I've done it a couple of times, a dietitian, just talk about your diet. You know, I can't sleep well,
I'm
that.
going to have to find out who this provider is after this conversation.
But you know, I basically applied for the minimum amount of cover. And then I just get all of these benefits for free. And if I'm speaking to a client and say, do you want to spend £15 a month on provider one, or do you want to spend 20p more to get all of this free stuff? It's quite an easy decision to make, really. And I think one of the biggest, you know, children's critical illness cover, that's quite often that's something that's overlooked. And some providers won't include it on a policy. And that's not necessarily a bad thing. Basically, if you don't have children, then you don't need to have it. So they'll remove it as standard with the option to include it. Others will include it as standard. And, you know, if you had £50,000 of critical illness cover, they'll pay out 25% of the sum assured as an additional payout. So it doesn't affect your 50,000. Your child's covered for every illness that you are, plus a few very common child-specific illnesses.
That's handy to know.
The providers that I like, and there's probably 2 or 3, you can tailor the children's cover independently. So you can have up to 100,000 of cover, even if you have only 20,000 of cover. And you know, it's the 5th most claimed on area amongst all policies. For an adult, cancer makes up about 70% of all claims, heart attack, stroke, MS, and then there's children's claims, so all of the claims. And you know, if you just need to take time off work to look after your child, pay for private treatment, obviously what's a very distressing time. It's, that's a big part that's very popular.
Amazing. I didn't even know that existed either. So Laurence, thank you very much for joining me on the podcast today. And guys listening, I hope you have taken some useful notes as well, because I feel like, again, this is so important. And I think it's really important you take out the policy. And thanks so much, Laurence.
Thank you.